Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is April 21st, 2025, and we're diving into the first quarter earnings report of HBT Financial, the holding company for Heartland Bank and Trust Company. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. HBT Financial has just released their Q1 2025 financial results, and there's a lot to unpack, from their net income performance to asset quality and strategic outlook.
Revenue and profitability overview. Let's start with the top line. HBT Financial reported a net income of $19.1 million, or 60 cents per diluted share, for the first quarter of 2025. John, how does this compare to their previous performance?
HBT's net income saw a slight decrease from $20.3 million in the previous quarter, but it's a significant improvement from $15.3 million in the same quarter last year. Their adjusted earnings per share came in at 61 cents, beating the analyst forecast of 57 cents. This indicates strong profitability despite a challenging economic environment.
And what about their net interest margin?
The net interest margin increased to 4.12%, up from 3.96% in the previous quarter. This improvement is primarily due to higher yields on interest-earning assets and lower funding costs, which is a positive sign for their core banking operations.
Asset quality and loan portfolio. Asset quality is always a critical factor for banks. How did HBT Financial fare in this regard?
HBT Financial maintained exceptional asset quality with non-performing assets at just 0.11% of total assets. Their allowance for credit losses is stable at 1.22% of total loans, and net charge-offs were minimal at 0.05% of average loans. This reflects their strong credit discipline and risk management practices.
What about their loan portfolio?
Total loans stood at $3.46 billion, nearly unchanged from the previous quarter. However, average loan balances increased by 2.2%, indicating healthy loan demand and effective portfolio management.
Operational efficiencies and future outlook. Operational efficiency is another area of focus. How did HBT perform in terms of expenses and efficiency?
Non-interest expenses increased slightly to $31.9 million, primarily due to higher salaries and benefits. However, their efficiency ratio remains strong at 53.85%, indicating effective cost management. This positions them well for future growth.
And what is the outlook for HBT Financial moving forward?
CEO J. Lance Carter expressed confidence in 2025, citing their strong profitability, solid balance sheet, and credit discipline. They are well prepared for various economic environments and are open to acquisition opportunities as markets stabilize.
EPS forecast and analyst expectations. John, let's discuss the earnings per share forecast. Analysts were expecting an EPS of 57s. How did HBT Financial perform against this expectation?
HBT Financial exceeded expectations with an adjusted EPS of 61, beating the forecast by 0.04. This outperformance is attributed to their strong net interest margin and effective cost management, which helped boost their bottom line.
How many analysts were covering this forecast?
The forecast was based on estimates from 3 analysts, which makes this beat even more impressive given the consensus.
Key takeaways. To wrap up, HBT Financial has delivered a strong start to 2025 with impressive earnings and asset quality. Their ability to beat EPS expectations and maintain a robust net interest margin highlights their operational strength. John, any final thoughts?
HBT Financial is well positioned for future growth with a solid balance sheet and strategic focus. Investors should keep an eye on their performance as they navigate the economic landscape.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on HBT Financial's performance in the comments below.